In a surprising turn of events, Tesla's stock has seen a rise despite the company's recent missed targets. Now, let's dig deeper into this captivating paradox that's left the financial world buzzing. In the recent earnings call, Tesla reported a 9% drop in first-quarter revenue, marking the largest decline since 2012. The company attributes this significant drop to ongoing price cuts. But that's not all. The net income also took a 55% plunge. Yet in the face of these seemingly grim numbers, Tesla's stock went against the tide, rising by 5% after the report. This unexpected rise has left many scratching their heads, wondering what's behind this financial enigma. So, what's the secret sauce here? Well, it appears that investors are looking beyond the immediate numbers. Despite the concerns about weak deliveries and rising competition, the news of Tesla's plans to launch more affordable models and increase production capacity seems to have infused a dose of optimism into the market. But the plot thickens. Amidst this financial roller coaster, Tesla is also in the throes of a major restructuring, with 2 executives stepping down. Capital expenditures have also risen by 34%. Yet, despite these internal shifts and external market pressures, Tesla's energy and services divisions have managed to increase their revenue, although gross profits have declined due to the ongoing price cuts. This paradoxical situation certainly paints a complex portrait of Tesla's current state. On one hand, there are missed targets and declining profits. On the other, there's an unexpected rise in stock price and promising plans for future growth. This unexpected rise in stock price, despite the missed targets, has left many investors with a sense of intrigue. So buckle up, folks. It seems we're in for quite a ride as we watch this intriguing Tesla story unfold. CNBC's recent article sheds light on Tesla's Q1 2024 financial performance. Diving deeper into the specifics, it uncovers a significant 9% tumble in Tesla's initial quarter revenue. This plunge is the starkest we've witnessed from the corporation since 2012. Remarkably, Tesla's net income endured a blow as well, dropping by a hefty 55%. These figures might initially look disturbing, yet there's additional context behind these numbers. Tesla correlates this revenue and earnings slump to continuous price reductions. The firm has been deliberately trimming prices with the objective to make their electric cars more reachable to a wider customer market. This approach aligns with Tesla's far-reaching ambition to hasten the world's shift to renewable energy. However, it's not an entirely bleak picture for Tesla. Quite the contrary, the company's shares ascended by 5% not long after the report's release. This surge can be traced back to the proclamation about the introduction of cost-effective models and a growth in its production capacity. Apparently, investors retain a positive outlook on Tesla's prospects, notwithstanding the current revenue and income fall. Besides, Tesla's energy and services sectors have witnessed a revenue increase, although gross profits have taken a hit owing to the earlier mentioned price reductions. The firm is presently in the midst of a revamp, with 2 executives stepping down, and capital expenditures have escalated by 34%. Despite the revenue and net income fall, Tesla's shares have managed to remain buoyant, putting forward an intriguing scenario for investors. This situation underlines the trust the market holds in Tesla's long-term plan and its potential to transform the automobile industry. The journey ahead might be rough, yet it appears investors are ready to strap in for the journey. Let's delve deeper into Tesla's financial figures. In the first quarter of 2024, we observed a rather significant dip in Tesla's earnings. The figures show a 9% fall in revenue, the largest since 2012, which is definitely not a trivial matter demanding a more detailed scrutiny. The chief factor contributing to this decrease seems to be the continuous price reductions. Although Tesla's initiative to make their cars more affordable is praiseworthy, it hasn't been without its fallout. These price cuts have undoubtedly impacted the revenue, leading to this 9% decline. On the subject of net income, the scenario is even more severe, with a plummet of 55%. This massive downfall clearly indicates the deep-rooted effect of the continuous price cuts on Tesla's financial health. But why would Tesla willingly implement these price cuts if they're resulting in such a drastic revenue and net income reduction? The answer is nestled in Tesla's grander strategy. By reducing prices, Tesla aims to expand its market share and cater to more customers. They're investing in the future in the hope that the immediate losses will be outweighed by long-term profits as their vehicles become more accessible to people. However, this tactic isn't devoid of risks. We're currently witnessing how the continuous price cuts are a significant drop in revenue and net income. It's a precarious juggling act, and only time will be the judge of whether this strategy will eventually prove beneficial for Tesla. What's clear is that the price cuts have been advantageous for customers. They seem to be burdening Tesla's revenue and net income. As we progress, it's intriguing to anticipate how Tesla will maneuver these obstacles and what tactics they will deploy to reduce the blow of these price cuts on their financials. Interestingly, Tesla's stock has seen an uptick despite a decline in revenue and net income. This unusual occurrence is puzzling but not unheard of in the stock market. Here's why this might be happening. The world of stocks and shares often values anticipations of future growth over current figures. In the case of Tesla, after a 9% decline in revenue and a 55% fall in net income, the stock surprisingly surged by 5%. This might seem contradictory, but the stock market is a forward-looking entity. It doesn't merely consider today's performance, but also the potential of what's to come. For Tesla, there are a few factors that have sparked investor interest. The first is Tesla's announcement to introduce more affordable models, potentially tapping into a new demographic and boosting sales. The second is the company's intention to expand its production capacity, which could lead to an increased supply of cars and potentially more future revenue. Additionally, Tesla's energy and services divisions have seen an upswing in revenue, which are promising segments that could counterbalance some of the automotive division's losses. Amidst the financial fluctuations, Tesla is also going through a restructuring phase, which incites hope for positive change. Despite a few high-profile resignations and a 34% increase in capital expenditures, investors are likely betting on this shift and anticipating better future performance. Therefore, though the decline in revenue and net income may appear concerning initially, the surge in stock narrates a different tale. It presents a narrative of optimism, potential, and future growth. The surge in stocks in the face declining revenue and net income instills a sense of hope and anticipation in Tesla's future prospects. To conclude, let's summarize the key takeaways from this video. First and foremost, Tesla's report for the first quarter of 2024 painted a picture of highs and lows. There was a noticeable decline in both revenue and net income, falling by 9% and % respectively. However, there was an unexpected twist with a 5% increase in the company's stock value. The larger drop in revenue since 2012 was due to ongoing efforts to cut prices. The strategy, despite impacting Tesla's gross earnings, is geared towards making the vehicles more accessible and affordable, thus potentially expanding market share and driving higher volumes in the future. The significant drop in net income could be traced back to the company's current restructuring phase, a clear indicator being the resignation of 2 executives. However, Tesla's resilience is seen in its willingness to invest and adapt for future growth, as demonstrated by a % increase in capital expenditures. The surprising rise in stock shows the market's optimism for Tesla's future, primarily driven by the company's plans to accelerate production and launch more affordable models. Tesla's diversification into energy and services also seems to be paying off, providing a safety net against the downturn in the automotive sector. Despite the challenges faced by Tesla, the rise in stock presents a glimmer of hope for the future. Stay tuned for more updates on Tesla's financial journey.